Franc is still around that 120 mark against the euro, but will the ceiling hold in the long run? And what will its impact then be on other currencies? So I want to get more on this from an FX specialist who spent more than a decade at the Bank of England before making the move to Barclays Capital. Paul Robinson is now Barcap's head of currency research and joins us from the bank's London offices. So Paul, let me start by getting your thoughts on potential assets which could benefit from this floor in Switzerland. Are we going to see a frantic search here in Europe for new haven assets?
Well, I think it's important that you mention the word haven because really the Swiss action is good for Switzerland but doesn't really address the questions facing the global economy. So I think that investors are still going to be extremely nervous about prospects in Europe for global growth, etc., and looking for safe haven assets. To my mind, I think the Norwegian krona, the Swedish krona that did benefit yesterday are probably not the ones that are going to be strongest in the longer run as a result of these actions. I think really you want to go back to more conventional safe haven assets. The dollar, despite all of the issues facing the US economy, to some extent the Japanese yen, especially if the dollar strengthens as well. And you could see some kind of really curious ones coming out, such as the Australian dollar, for example, which has got very good fundamentals. But really, I think there's one which wins out over all of those, and that's gold.
So you see the price of gold rising off the back of this decision. I'm just curious as to what you say about the Swedish krona and the Norwegian krone, because we spoke to HSBC a little bit earlier, and David Bloom there saying that actually these currencies are likely to benefit from the floor in Switzerland. And particularly the Norwegian krone, that currency has been coming under pressure from the drive for haven assets, hasn't it?
Sure, and Norway's in a good shape. Its fiscal position is very sound. Now, clearly, it's got a very large current account surplus. It's got a huge stock of assets that it can manage its currency with. But the thing I worry about in terms of the Norwegian krona is the combination of its exposure to oil, but particularly liquidity. That if we have renewed problems in global financial markets, then I think it's reasonable to suppose that we're going to have renewed problems in terms of the liquidity of markets. And every time we've seen this over the past few years, we've seen relatively liquid assets, not just in FX, but around the world, appreciate. And frankly, the Norwegian krona is not a particularly liquid asset. The same is true about the Swedish krona. And what we tend to see is actually them being pretty pro-cyclical. So when pressure comes onto equities, when pressure comes globally, they tend to depreciate. And I don't think that this is an important enough move to change that.
And I'm just wondering, to what extent could this create a level of instability on financial markets? You're saying that more traditional assets like gold, like the dollar, will benefit from more inflows, but to effectively take away an asset that investors have so far this year been clamoring for?
Yeah, I think that's a really interesting question. As I said earlier, I don't think it makes the global economy or global financial markets any less risky at all. And it does take away one of the favoured safe haven assets. That said, I don't think we should really think that it is a huge problem for financial markets either. The Swiss franc was overvalued. I think that was creating distortions of its own within the Swiss economy. And by reducing that overvaluation, the Swiss National Bank is doing something to stabilise conditions in Switzerland. So from that perspective, it actually does add marginally perhaps, but it does add to the stability of the global economy. Frankly, I don't think it either adds massively or detracts massively to global risks.
No, I suppose the move in itself it doesn't make, as you say, it doesn't make the markets any less riskier, but just thinking about the broader implications, could this be the first salvo in a sort of flare-up of the currency wars, if you like? Because as we see this negative data coming in and signs that the global economy is slowing, countries are going to be relying ever more on their exporters. Everybody wants a weaker currency. Are we going to see other central banks taking similar action?
Well, I think currency wars is an unfortunate term because it implies aggressive action, etc. But I think in the SNB's case, that's unfair, that the Swiss franc really was overvalued. Compare that perhaps with the Japanese yen, which has, the Japanese have also intervened to weaken the yen's value. Now, that isn't quite so clearly overvalued. But I think the bottom line and the reason why people are very interested in currency wars is because policy options are running out. Monetary policy is constrained by zero interest rates or near zero interest rates. People are a bit unsure about the effectiveness of QE. fiscal policy in many countries is constrained by very large debt levels and political problems. What's left? To some extent, it is just currencies, and that could prove very, very troubling in the longer run. The 1930s, where there was currency wars, really was not a good blueprint for how to run global policy. So yeah, I don't want to be too pedantic about the terminology. I think this is a move towards currency
Paul,
wars.
that's quite a list of headwinds that you reeled off there. So
Yeah.
I'm just wondering, what is the best strategy in this environment? How do you play this?
Well, I think now is not the time to get too aggressive when it comes to trying to time the market, trying to cash in on very low prices and have huge rallies. I think we are in an extremely risk-averse environment. There is so much event risk, especially in Europe, over the next month or two, that we would encourage investors not to be really short risk, but certainly not to be overweight risk. I think in terms of currencies, if you think of gold as a currency, I still think it looks extremely attractive. I think in the short run, the dollar also looks more attractive, although clearly the speeches from Obama, Bernanke this week, and then the Fed meeting later this month are going to play an important part in that, and they are going to carry on having loose monetary policy. But I think now is a time to have less risk, and I think go for the conventional risk haven, safe haven currencies.
Paul Robertson, Global Head of FX Research, Barclays Capital. Good to talk to you.
Thank you.